Welcome back to
Infinity Well.
Or should we say Infinity Wars?
Infinity Wars, yes, much better. I've got my
Yeah.
lightsaber at the ready, young Padawan.
Yeah, I am ready. I'm here with my baby Yoda.
Yes.
Yeah, from the Mandalorian.
May the Force be with you this year, right?
The Wars, yeah, exactly. Coming into the new year.
Okay, let me turn my, before I burn myself, let me turn my lightsaber off.
Yeah, we don't want any accidents
There
happening.
you go.
We want you in a whole, not a half.
Exactly, cut in half.
As you can see, we're both in our spaceships, obviously.
We are.
We got
flying towards the future, helping,
Yeah.
guiding you through the millennia.
Yeah. We got called on important missions, didn't we, Martin? So we had
We did to help people, and we can combine Star Trek with this, to go beyond where no man has been before.
Yeah.
I think we should do that next, Kiki.
To be honest, I just left in my spaceship because London went into tier 4. So
yeah. Well, we're in tier 4 as well, right? We're in tier 4, so we're projecting ourselves. Yeah, actually, yeah, we definitely need to get those teleporters going.
Yeah, exactly. Well, welcome back, everyone. We hope you had a nice Christmas.
Nice to see you back. Yeah, happy Christmas, everybody. Yes.
Yeah, of course. Yeah. It definitely, most probably, definitely wasn't the one that everyone had planned for sure. But at the same time, we definitely hope you had a good one. And we're excited to bring this week's video, which is all going to be about all the best stuff of our year of 2020 in terms of stocks. So we're going to be talking about the best performing stocks, the best performing dividend yielding stocks of 2020, and we're also going to tell you what we are looking at. Me and Martin personally looking out for in 2021 for upcoming for stocks.
Yeah, and then we're going to do one next week, right? So before the new year, what we're anticipating in 2021.
Yeah,
and where we think positioning will help.
Yeah, exactly. So there is no excuse. You should be completely ready for 2021 going into the new year. So should we get cracking, Martin?
Yes, come on, feed them, Kiki. Come on.
Let's go. So obviously, before we get started, is make sure you smash that like button, because the way the algorithm works is if you don't smash it, you're not going to see our videos in your YouTube feed, and it's not going to pop up. Also, make sure you're subscribed to the channel. So if you're new, welcome, subscribe. You'll always see our videos, and also hit the notification bell, because then you'll be notified every time we drop a new video. So cool. Now that's out of the way. So let's get into the juicy part of it, which is the best performing stocks of 2020, of this year.
Drum roll, please.
Drum roll, please. And you're going to be surprised by some of these, actually, Martin. I'm going to put the obvious ones out the way.
Yeah.
Which ones we've been blabbering on about this year. So, the Tesla, the NIO, the XPengs, all the EVs. We know they've had substantial growth, and we know, obviously, what's happening at the moment, the market slowed down. We'll talk about that at the end, but I just wanted to get the obvious ones out the way. So again, Tesla, NIO, XPeng, all those great ones we've been talking about. And I wanted to talk about the ones that we haven't necessarily been talking about, which, to be honest, could even for you guys be ones that you're looking into, and I will tell you if it's ones we're looking into. So the first one is BATM Advanced Communications.
Batman.
Batman, exactly.
Do you know what? BATM was in the tech boom.
It was, yeah, definitely.
I traded Batman those many years ago. Israeli company. Yep.
Yeah, it's obviously listed in the FTSE All Share Index. It's an information tech company. For those of you who don't know, they develop a lot of technology, market data, telecommunication products for a lot of the medical sector as well. So if you go onto their website, you'll see everything COVID-19. So you can imagine, especially in this time, how much they were in dire need, basically. So that company did over 260% this year, increase, which is phenomenal. It's it's madness, honestly. So the ticker for that is BVC. If you want to take a look at it, I will show you the charts as well after we go through this section.
Hang on. So that is not Batman then, because Batman was BATM.
BATM.
So it's not Batman then.
No, there isn't a ticker. It's still Batman. The ticker is BVC. So it's still listed as
right. Because it used to be BATM. So yeah,
maybe it's changed.
Yeah, maybe it's changed.
Possibly, yeah.
After the bubble reinvented itself or something like that. Okay.
Most probably, yeah. So at the moment it's BVC. You'll find it as under BVC, and we'll look at the chart in a second. So that's Batman. The next one is quite interesting. Is not one of my personal favorites. I'll tell you why. But Fiverr. Have you heard of Fiverr, Martin?
No, fill me in. Yeah.
Okay, so Fiverr is basically a platform that allows freelancers to connect with clients. So if you wanted accountancy, you wanted logo design and all this kind of stuff, you go onto Fiverr, you can find people across. Now, I'm personally not a fan of it because they really undercut people and it's quite unfair, for especially people that are trying to build themselves. But, you know, hey ho, quality versus quantity. That's all I'm going to say there. But in terms of stock perspective, you know, 770% this year, which is absolutely phenomenal. And I feel like a lot of people sort of sleeping on this company. Now, you might have seen their advertisements all over YouTube. And it only really occurred to me when I was looking at this today, like, shit, actually, yeah, they're always in my face. So big marketing budgets, company must be doing well. They're not just spitting money out there because they're definitely running and profitable. So that is another company. The ticker is FVRR. So again, we'll look at the chart and we'll see. It's looking very, very interesting. But 770% this year alone is amazing, right?
I mean, don't forget the other thing is I know that, you know, people want it done cheap and stuff like that, but these companies don't offer you that personal touch, right?
Yeah, exactly, 100%.
Between cost and having it done right. So
100%.
There's a product for everyone out there.
Yeah, no, 100%. I completely agree with you, 100%. So yeah, the next one is Plug Power. So Plug Power is basically, they provide a lot of sales solutions to companies such as Walmart, and I've never come across. They power a lot of their forklifts in their warehouses, and I've never heard of this company before. So only when I was doing my research this week, and this is definitely one I'm going to look into next year. But they did over 867% this year, which is insane. You know, another crazy one. I mean, you even look at Tesco, right? Like Tesco is one of the biggest bad boys in the UK, which actually did not even dip from the coronavirus impact because obviously the demand. So you can just imagine the demand for the warehouses and tools and equipment. So. It's this chain of thinking, isn't it? It's the thinking of investment.
The warehousing, it really comes in from also, you know, people if you're going to go online, they'll need distribution centers. So that's where these warehouses come in. That there'll be more and more distribution centers. And just taking a side perspective, when we talk about property as well, a lot of these pension funds are now going to distribution centers because that's the way that they're going to go. That's where they feel it's all going at the moment.
Yeah, 100%. Completely agree, 100%. So that is a very interesting one. So again, the ticker for that is actually Plug, so PLUG. Again, we'll look at the chart in a section. And I know we've got this split of fans. We've got the people that are safer investors and the people that are riskier ones. But for the safer ones, you know, if we're looking at the FTSE 100, so the companies that did well in the FTSE 100, so Scottish Mortgage Interest Trust PLC. 106.46% this year. Their ticker is SMT. Ocado Group did over 83% this year.
Home delivery.
Yeah, exactly. And Fresnillo over 95% this year.
Mining.
Yeah, exactly. There you go. So they're your safer ones, the ones that have proven track records, profitable. So that's that. So that's some of the best performing stocks. That's not the only ones. That's just the ones mixed from US and UK that I've just compiled together. Of course, there's many, many more you can find out, but that gives you a good sort of variation of all sorts of industries as well, not just tech, which I know I like talking about. So a good mix up there. But that's on that side. So what we'll do is we'll flip over to the chart so you don't forget the ones we've mentioned, and just have a quick look at the chart. I'm not going to look at every single one of them.
Okay. So
yep.
BBC Batman.
Got it, Batman. So this is the one I was saying is looking the most interesting for me because in 2020. So obviously you can see here at the start. This is around March. So where my cursor is currently is around March. This is the massive increase we had from March all the way up to July this year. Absolutely just shot up. Now, this is what we're looking for, perfect sort of place to potentially enter and potentially look at. This is on a weekly chart, by the way, Martin. So if we're looking at this, you know.
.com on the left-hand side, I see.
Yeah, exactly. You've seen the .com on the left-hand side. Look, we went from
Part-time trade it around there.
like so, ever since then, this is the highest we've ever come up for Batman, right? So we are definitely making movements. But the interesting thing I found about this chart, and again, maybe one to look out for in 2021 is the price that we're currently at. We're just sitting below the MAs. If we do end up coming back above them, and we do end up making some sort of forward movement, this could potentially be, for me at least, personally, this looks like a good position for me to enter.
Yeah, it looks like a retracement. And you've got just trying to have a look. You've got a 9 days at a 9-day moving average and a
18, 9 and 18.
8-day.
18. So one's an 18 and one's a 9.
Okay.
Yeah.
Yeah. So you can see that the moving averages are beginning to turn back up again as well now. Yeah. They seem to be troughing.
Yeah, exactly. And then if we come down to the daily, we can already see that the average.
So they're beginning to turn up. So if you are going to be looking into that, then it is waiting to see if there's there's a retracement back touching the 18-day moving average.
Yeah. Exactly, 100%. So that was definitely a big interesting one for me to look at.
Something that people can trade here in the UK as well.
Yeah, exactly, 100%.
I think it's listed on the Nasdaq as well, isn't it? Is that listed on the Nasdaq as well?
To be honest, I'm not 100% sure with you.
You can look that up. Right? You can look it up.
Yeah. So we've got that. The next one we'll go to is Plug. So this is a very different one. We've not had any retracement, but we've had this massive spike. And
what do they do, Kiki? Just remind us, what do they do again?
So Plug are the ones that provide the battery solutions for forklifts that are used a lot in Walmart as well. So energy and another energy supplier basically in terms of batteries. And again, it's very intriguing to look at these energy suppliers because these people can pivot and also add on to any other demands in different industries for batteries. So again, shouting out to and nudging towards the EVs here, if they are going to be going into, so you want to look at these sort of companies very carefully. But again, the chart here is very, very interesting because if we scale down to the monthly, the last time we had the closest high to where we could potentially be heading, which is around this region here, right, was in 2007, the 2007 time. So if we do end up coming up to this, again, potentially another one to look out for in 2021. If we bounce off of this and completely coming down, again, it's your duty to also look at what is happening in this space where this sort of demand for these products are. Again, one to look out for in 2021, but it's looking promising because, like I said, we've not had this sort of acceleration in this company for a very, very long time. And you actually see this as a spot and pattern, Mars. I'm not sure if you've seen this, but over the last decade, a lot of companies have been declining. A lot of big companies have been declining. Now, all of a sudden, maybe after this such a deep recession and such a deep economic downturn, these companies can revive themselves up. So a lot of people are looking at these companies as dead. And for me, BP is a massive example of this. And I know there's a constant, sort of mindset against the oil thing. But don't forget, these are massive companies. These are huge companies with a lot of cash behind them. So even though they've been declining for the last 20 or at least the last decade, there's nothing to say that these people can't turn it around, completely invest in new tech or energies or whatever, and you have a new formation of a company, right? So don't look at these companies as they're gone, because trust me, they have money.
Yeah, the thing is, Kiki, look, the ones that going forward, the ones that have big cash piles, right? Classic example is look at what Apple have done. Right? Apple over the last 5 days. I know we're recording it after Christmas, right? But the markets are open tomorrow. The London market's closed because of Bank Holiday Monday. But if you look at what Apple did, someone just, and do you know what? I also believe that it's a lot of hype that someone's put it out there. Oh, Apple are making a iCar, right? Yep. And so I'm sure that people had bought long calls basically, and they're just beefing up the market, right? Yeah. But that's me being, being who I am, thinking, hang on a minute, this, and all of a sudden Apple's gone from you know, where it was trading it, I think is $115 all the way up to $130 within a few days, really.
Yeah, exactly.
All on the basis of EV. But
Yeah.
the underlying thing about this is that Apple have a huge pile of cash.
Yeah.
Right. So you don't know whether companies going forward, rather than actually, you know, companies can grow through acquisition, right?
Yeah, exactly.
It's just like if you're a property, or if you're a company owner, you can either grow through organic ways, your normal cycle, and expanding, and or you can grow by taking over.
Yeah.
Right? And so, yeah, when you've got cash piles, that's what you're going to, what you will find that companies may start doing, right?
Yeah, exactly. 100%. Completely agree. But so again, another good one to look out for. And the last one on this is Ocado that we will look at.
Look at that, man.
Again, you know, look at that. I mean, these
are UK stay-at-home type plays, aren't they? Really?
Yeah. Exactly. You know, never looked back, and doesn't really look like he's looking back. Could be another. I mean, just to give you an example, look, we go up, we retrace, we shoot back up again, right? We go up, and here as well, you know, we go up, we retrace, and we finally shoot back up again. So this is why retracements, especially, you want to keep an eye out for, and that's what we've had here. So if we go down to another weekly, we can see, you know, we're just hovering around the M8s. We're not necessarily broken. I wouldn't say we're broken below or solidly below or above. But again, this is a very, very key zone. You know, this is a huge key zone for this. So we want to see, again, another one to look out for. You see, I always like this time of the year because it's a very, very nice way to start fresh. And it's like, because don't forget, the stock market, whatever market it is all off of human nature, right? It's all off of investing human nature. And everybody's slowing down at this period. People are taking this break off between Christmas and New Year. It's a really good time for you to get ahead and start looking without all the noise, without all of a sudden Apple comes out with its own, you know, news and whatever. Like, just settle. Let the dust settles at this period. So look at the charts, look at what's happening, what's not. And this is why we're releasing this at this time. It's for you to take this opportunity to look at these things. So
the other thing is, Kiki, that people have to, you know, in this sort of environment, right? People have to concentrate more on risk as well, right? Yeah. So they have to have stop losses put in, right?
Yeah.
And where to buy points and stop losses, they have to have them put in. And this, like you just said, highlighting where you're going to put the buy point in, highlighting where you're going to put a stop loss in. So typical of this one, look, it's retraced, it's bouncing around, right? So yeah, it's a really good stock that you've just brought up, and it's a case of looking at it to see if it starts increasing its buying point, and the buying point would be when it increases above the moving averages, basically.
Exactly, 100%, yeah. So that's that with the stocks, and now we're going to go on to the best dividend yielding stocks.
So hold on, sorry. I don't want to stop you mid-flow, mate. Don't want to stop. But what about all the others? Like, what about the Teslas of this world and the Neos of this world? What's going on?
Okay, so
listen, I tuned into this video for you to talk about the Neos and Teslas. What's going on?
So what we're gonna do is now personally I'm gonna put them into a very different category as the very popular one. So
you're going to do that towards the end.
The Tesla, yeah. I'm gonna put them into a separate category, and we're gonna do a bit of an update on that as opposed
to. That's cool. I just wanted to say, you know, because there's people out there watching, going, "Yeah, I know, he still hasn't shaved off his beard. I'm still here watching him, and he's in a spaceship this time."
I'm in a spaceship this time, exactly. I'm on the way to the moon, mate. Yeah, that's what I am.
That's where we want to take everyone else, yeah?
Yeah, exactly. So obviously different, I'm going to put that in a different category, and I'm putting that category right at the end, just to give you an update on that. Cool. So now we're going to go on to the best dividend yielding stocks of 2020, right? So UK and US, I'm not going to do anything like outside that. I don't focus on it outside of it, so I'm not going to talk to you guys about it outside it. And with these, I'm just going to list these companies you most probably know, and this information. The list of this the article is in the description below when you watch this video. So, Imperial Brands, obviously everyone knows, should know.
Dividend yielder, long term.
15%. Like,
if you're only after dividend yield, that's your one. If you're only after seriously,
it's true.
you're
good. Yeah.
only after dividend yield, but don't forget when there's a lawsuit against smoking or anything like that, tanks, buy
Yeah.
it then. But you know,
Yeah.
as long as people carry on smoking, and I think, unfortunately, Far East people still smoke quite a bit.
Yeah. Exactly.
So that's what it is. Yeah.
Yeah. 100%.
It's a tobacco company, by the way.
It's a good way to summarize that, though. If you want the yield, then
That's it. It's a solid. These are yield earners, but don't forget a lot of funds now are orientated towards ethical investing, right?
Yeah, 100%.
So this may not fall within that category.
That's great. Yeah.
But it just depends on. Listen, we don't dictate where you invest. We merely give you the information, right?
Yeah, exactly. 100%. So if you're a strong environmentalist, or not even environmentally, health conscious, fine, cool. But if you're ruthless and you're just looking for a yield, then you know where to go.
So what's the yield on Imperial?
15.11%.
How much?
15.11 or 15.
Okay, so let's just cover that, just if you don't mind, for 1 second. Okay, so you've looked at it. So on the downside,
yeah.
What do you think the risks are on the downside that they cannot maintain their yield?
Me personally.
Yeah. Let's have just a quick conversation because I'll tell you what I'm thinking. You tell me what you're thinking.
Well, for me, the tobacco industry anyway is definitely one. There's a massive split. There's a lot of health and environmental things that go against it. Like lawsuits is a big one, right? Lawsuits is a massive one for the dip. Yeah. But for me, regardless of that, there is still going to be people, and there's still youngsters and people still smoking, still taking tobacco. Whether or not I don't necessarily know whether or not there's a decline in demand because I'm not 100%. I definitely think in the UK people have
in the UK and in the West there is, but not in the Far East.
Yeah, exactly.
Most of these companies are making money. I mean.
So for me, to be honest, it's as simple as if you want the yield, go to that. There's not really going to be much. There's not really going to be much change. And we've seen it in the. I mean, the way I'll see it is I'll look at the last 5 years, 10 years. If the yield has been around the same, then for me it's great. Yeah.
I mean, the other thing I wanted to add is, when in times of recession or stress, people relate to alcohol and smoking.
That's true. And
smoking, right? Yeah. And right now, people are feeling that we're in a boom and that inflation's going to rise, so they're going to more growth stocks. When you start feeling the fear, right, they'll be going to safe havens. And believe it or not, tobacco is one of the safe havens. So the safe haven stocks, which I think we'll talk about in the later videos, safe haven stocks has not performed that great.
Yeah, right? Exactly.
But we talk about cycles. Everything will be a cycle. So middle of maybe next year, March, April time. Maybe people want to actually rotate out of some of the growth stocks and go into some of the dividend stocks because there'll be a panic somewhere.
Yeah,
and there's a panic, they'll pile into these sort of things, basically.
100%, completely agree. 100%. Yeah. So that's 15%.
That's good.
Next one. Yeah. Again, I won't explain what a lot of these are. Just sort of list these now. So M&G, which is giving just over 12%, which is solid.
That's amazing.
Yeah. Everaz, 12%, just over 12%. Again, solid. Standard Life Aberdeen, 9%, well, nearly 10 actually, 9.9. Lumen Technologies, I think that's US, I believe, or might be wrong. 9.5%. Iron Mountain is US, 9%. Legal and General, 9%.
I'm actually looking at Legal and General myself, actually.
Yeah, again, just solid, solid yielding. It's insane. It really is. Like if you're just looking at steady dividend income, quarterly or whatever, and whenever they give it, these are the solid companies. And then BP 8%, or 7.8%, nearly 8. Sorry, 7.8%, nearly 8% basically. Yeah. So again, really, really good. I mean, for me, BP is like up there because obviously what happened this year and the price it's at, and then also on top of that, it's still giving 8% yield. It's like gold mine, right?
Yeah, the thing is, I mean, with stocks like BP, at the end of the day, they've got, it costs a lot of money to actually extract stuff out of the ground, right? And, unfortunately, we're not going to get away from oil, the requiring of oil, maybe for another 10 years, 15 years, 20 years,
Yeah.
So these carry, and these will have cycles. Yeah, you know, over, if you're looking for long-term growth, then maybe this is not, and you've got I'm going to tuck it away and never look at it for the next 25 years, then maybe this one may not be for you. But if you are willing to actually understand cycles and take advantage of low yielding stocks, then yeah, it's like, can you, I've forgotten what it's called. We had it in Leicester University called the Attenborough Building. Called, yeah, there's a lift that goes up one side and goes down, and you actually walk into it, so it's open.
I've been in that.
What are they called, Kiki? Do you know what they're called?
I don't know what it is.
Right,
but
it's like that. So it's almost like a case of stepping onto one, then moving on to another one, because it's moving like that, and that's what investing is all about, really.
Yeah. I like that. I like that analogy. That's good.
Yeah, but whereas, you know, in property you can't do it as much because you've got more expensive costs associated.
Yeah.
But with stock and shares, you can really do that.
Yeah. It's not that fast on execution wise as well.
I have to look that up for the next video. What it's called? I forgot what it's called. There's a special term for it. Yeah, I forgot.
I've been in that, but yeah, I know what you're talking about.
Yeah.
That's cool. So I think now is the time that we're going to talk about what we're looking out for in 2021. And first, this is now where I'm going to start off with just a bit of a summary of the ones that, so the NIO, the XPengs, where they're at, and also gold as well, which is what we did a video on. So obviously I want to update you guys and not leave you off the hook. As Martin was saying, you know, you're asking me all these questions, where are they at? So let's give you the answers then, shall we? So I'm going to bring up the charts again. We're going to look at NIO and XPeng. We'll look at gold as well first. And I'm going to give you a bit of a rundown of where I think these things are heading and whether or not they're 2021 solid candidates, shall I say. So starting off with NIO first. NIO, I think, was the one that had the most increase this year. So you can see from June to absolutely this year, madness. I think it's over 1,000% or something, which is insane. Again, I didn't mention this at the beginning because it's one we've already done. So with this, I do personally think we are still looking for a bit more of a pullback, a retracement. I don't think we're nowhere near done with this. This is not a retracement for me, to be honest. It could, again, I could be completely wrong, but I'm just looking at this from a perspective of where this market is at the moment. So obviously I'm heavily reading into this market. There's a lot, actually what you mentioned about the Toyota, Martin, when we were talking about, right, is the company, don't forget, we're missing a big segment here. These new companies that are coming in, the EV companies, don't forget there's already big car companies out there that are already profitable, that are already working on this tech, that are even hydrogen, right? You were saying. So don't miss these people out. And and I'm seeing even Vauxhall Corsa have brought up an e-Corsa, an all electric Corsa, and Corsas are very popular for cheap insurance for first car drivers. That's a huge move. So a lot of these companies are making waves. So I want to be very, very cautious into thinking that this is just going to keep booming up, because I personally think that's not going to happen right now. I personally am waiting for this. So we've had a slowdown, you know, I mean, we're looking at this on a weekly chart here, Martin, and you know, we had this last spike in November, which is when we was releasing all these good videos and stuff, you know, between like October and November, we had a really nice run, which I'm sure some of our followers, hopefully,
got onto,
yeah, exactly, because our timing was spot on. I'm not going to lie about that, but I do think there's a bit of runway here to be made. What about you, Martin? What do you think?
Yeah, I mean, to be honest, looking at it, right, Kiki, just going, if you look at what Tesla's been doing, you look at what some of the EV stocks have been doing, they've had a great run. Kiki, they've had a massive run, right? Yeah. So at the end of the day, you know, you like you said, you're now going to be waiting, because a lot of that gain has been put in. So people are now going to be waiting. Don't forget, when stocks have had a huge run, not everything goes up forever. Nothing goes up forever. There's something that goes on which is called rotation, right? Some people take profits. So I wouldn't be surprised before the end of the year that people start taking profits, because if I've made a huge amount of money, then I'll be going, well, I'm going to take some off the table here. Right? And then what I'm going to do is I'm going to either invest that into a different sector or sectors that I think will be coming up. And that's why I think, you know, in next video, we will be talking about where we think 2021 will be going and the stocks will be looking at. And I think in that period, I think there'll be a rotation more towards value, and less towards growth, because growth has had such a tremendous run. That's not to say growth is dead, by the way, but there may be bigger opportunities elsewhere. Like you said, like we've said, basically. Is your mic all right, Kiki, by the way?
Yeah, can you not hear me?
Yeah, no, I can hear you all right, but it's buzzing quite a bit. So I just thought I'd mention it.
1 second, actually. I think it's because your sound is most probably very high. That should be better.
Okay, yep. Okay,
hopefully.
Yeah.
Yeah, so no, 100%. I completely agree with you. I mean, I got the Tesla chart up here as well.
Yeah, bring that up, Kiki. Bring that up.
It's the one here. I've got it up.
Oh, that's the one, yeah?
This is the Tesla chart, yeah.
Yeah.
So you can see where we've just had rallying, absolute rallying this year, and like you said, everything that goes up comes down, and that's the one very first sort of investment. Well, if you're trading or even investing in stocks or whatever, one rule that you should know: things don't always continue downwards, and things don't always continue upwards. So for all the like I was saying, all the companies that are going down, that have been going for the last decade, going down, they're not always just going to keep going down. There is going to be upprice for those companies as well, especially if they're big cash companies. And same for Tesla and all these other companies. There will be definitely downfalls.
Yeah, I mean, the interesting thing about Tesla recently, over the last 5-6 trading days, has been that Tesla, with Apple, this rumor mill, and it's always a rumor mill. Apple actually saying, well, they'll bring out an iCar. When I heard that, Vicky, I just went, what the do you know about making a car? Seriously, come on.
Yeah, it's true.
What do you know about making an automobile?
Yeah.
Right?
Yeah.
So, and Tesla has been around for 12 years, Kiki. It's been around for a long, long time.
Yeah.
Right? And now everyone's got really excited about, Apple's going to make a car. It's taken Tesla this long to create that EV, right?
Exactly. Yeah.
NIO and all the others, they've got their tech and info from copying others, maybe, right?
Yeah.
That's not to say Apple can't do the same, but why would you, when you're buying specific things, you go to specific people, right?
Yeah.
And it's all this hype, and I'm sure that someone had huge Apple calls. I think they've still got Apple calls out there, and then they'll dump the stock, once it gets to 140 maybe. It sounds like a good target for Apple, the 140 target on Apple calls, basically, right? And they'll make a tremendous amount of money on that. But at the end of the day, if a year ago, 2 years ago, before EV, if Apple said that they were going to announce they were making an iCar, the stock would have tanked, because the amount of investment that they need to make, the amount of money that they need to lose in order to make that product, people have just gone, no, forget it, mate. You're good at that. Don't go into this. Yet with this euphoria, with the EV, it's driven it up. So you've got to be mindful of whatever goes up doesn't necessarily keep going up. Ride the waves as they're occurring, and that would be my thing. Ride the waves as they're occurring, and then step off that wave when you think actually that wave is finished. Go and find the next wave. So be a surfer. Right?
Yeah, exactly. I think, to be honest, that is one of the things that we were talking about earlier this year, and that's what I've done, especially in my portfolio. Is like, as I said at the beginning, I have some which I'm just keeping. So I've invested; they're to be locked away, never touched until.
Yeah, and I'm going to just mention someone, because we talked about Disney. You bought Disney, didn't you? Right.
Yeah.
Now, I thought that was a great call. Do you remember that when we were talking about it? Way before we were doing this. We talked about Disney, if you remember. And I thought that was a fantastic call, right? Because Disney, with Netflix and everything, you look at it, right? And Disney is now higher than what it was prior pandemic.
Well, and this is the chart, Martin. This is the chart.
There you go. Look at that. Right?
And
you put it towards the bottom of that dip, basically.
Yeah. So this is a dip, and I purchased it around, I think, 86, around here.
Yeah. Which I thought was a brilliant call.
Yeah.
The reason why is this is a solid company that makes profits. Okay. Yeah. Granted, their theme parks are not working, but do you know what? They've got rights to some really good films, and That you can't buy it. You know, you can't go and say to Disney, well, give me your Star Wars franchise. They'll go, there's a door, mate, off you go. But
Yeah.
we can put it on streaming. So we
Yeah.
can now compete with Netflix, whereas Netflix needs to make their own content.
Yeah.
Disney's already got this ready-made content. They can compete with these guys, you know. And
Exactly.
people just completely forgot about that, and they just went, oh, panic. But things like that, you know. And now, you know, Disney is quite high, you know, but people are beginning to realize, well, actually, Disney can compete with Netflix. In fact, Disney can probably eat Netflix.
Yeah, 100%.
Because they've got so much content which they can put out.
100%, yeah. And this is the thing,
a well-known franchise around the world. It's
yeah.
a global franchise, that.
Well, this is the thing, because my brother made a very, very good point the other day. Because he was talking about Disney, and he was basically saying that if you think about it, Disney obviously Disney is a massive thing that being closed is a huge part of where their income definitely would have dropped.
Oh yeah, 100%.
But and whether this, obviously not to know with this pandemic, you know, there was a plan for this pandemic, but regardless, you know, Disney Plus came at such a time where it almost made them a completely new source of revenue.
Yeah.
Right? You look at Netflix. Netflix doesn't have a Disneyland. They don't have a Disneyland Paris. So when they come back into it, when they come back into the market, you're going to see that Disney not only has their Disney Plus, which everybody loves already because it's got all the favorite shows, and I mean Star Wars and all these kinds of stuff, ongoing. But on top of that, they've now got their opening of their Disneyland Paris and also their streaming shows, and also the film, and also the theater, everything running, right?
Yeah, I mean, I was unlucky. I didn't buy it, Kiki. You know, when we were talking about it.
Yeah.
You know, at the time I thought, yeah, I want to buy it, and then it started moving. And typical, I didn't get onto it. And now it's a case of, yeah, do you know what? I'm just going to wait. If there is a pullback, I'll get on that, and that will be like you. That will be for my longer term. Yeah.
100%.
Longer term. It makes a profit at the end of the day.
100% on Disney, Martin. You know, completely agree on that one. So yeah, if we get back to that, so we will look at the next. So we had a look at Neo. Xpeng is exactly the same thing again. Yeah. Although this one we had a recent IPO for this one in August that just came this year. Again, another retracement. Now this one's had a much deeper retracement, but don't forget at the same time it does look deeper because we only recently IPO'd, whereas we've got much more back data for Neo as compared to Xpeng. But again, for me, it's the same principle. I'm going to sort of give it a wait. I feel like this could definitely dip a little bit further below. For me, I mean, the almost obvious region is here. This is the last time we've had a bit of any sort of volume in this sort of area going on here. So I think if we can come round to this between 34 and 36 region, then me personally, I'll be looking to top up, as I like to call it, my credit. So that's what I'm looking at with Neo and Xpeng. But is there anything else that you want to add to that one?
No, I think you're right. Yeah, if you look at a lot of the EV stocks, what you tend to find in the stock market is that things will have a blistering start, and not just any market. If you look at Bitcoin, you know, Bitcoin hit over 20,000 3 years ago,
yeah,
and then all of a sudden went all the way back, crashing back down to below 4,000, basically.
Yeah.
And that's what you tend to find that it happened in cycles. So it wouldn't surprise me if Neo and Xpeng just came down, basically, right?
Yeah.
And they bounced around, maybe came down, and then. But you as an investor, you've got to be, putting buy alerts in there to see if it starts moving again. If it starts moving again, jump onto that bandwagon because that's what people are doing.
Yeah, exactly, 100%.
When we talk about building wealth, look at what these things have done, right? Look at what these things have done as far as giving you a return for your money, right? And I know we're going to talk about Bitcoin as well, but that's what these things are doing. But you've got to realize that you've got to step on and off, off, find a new one, find what's in trend, and we can show you how to do that. Yeah, we can show you how to do that. And find what's in trend, what's not in trend, and then just keep flowing with it. The vast majority of people that bought Neo, Xpeng, they just looked at it on the momentum type chart. momentum, when you look at it, is waning on this one.
Mm-hmm.
So
Yeah.
because momentum is waning, you'd say, well, I'll finish the momentum on that one, so I'm going to move on to the next one and find momentum. So they've gone on to Apple, right? Apple's got momentum, so I'm going to go on to Apple, right?
Yeah, exactly, 100%. And I think with that we'll move on to gold, which is the one that we did a video on not too long ago. So I'm gonna give my personal opinion, and then Martin, I also like to get your personal opinion as well. So now for me, as I remember, guys, as I mentioned, in December, the little secret that we had is gold normally rallies a lot, and for me, this was a position to buy a few weeks back. I purchased around here, which was in around November. So end of November is when I made my top ups on gold, and I am looking for this to continue to the upside. I do think we've had enough of a retracement. We've tested some very, very key levels, and I remember, if you recall to the last video, if we trace this back, I'm not going to do it now because it's big, but if we trace this back, this is a very, very key zone, and we've basically come and retested the zone and not been able to break below it. So that, again, this is sort of on a trading perspective, on a technical chart analysis perspective, we've come to this zone, not been able to go, and it just lines perfectly with the principle of December, between December and March, March or December, February, we see a nice rally, and I personally think this is ready to rumble, basically, gold. Now there is a bit of again, we'll talk about this, about Bitcoin, cryptos, all that kind of stuff, and we mentioned this before. It's a very alternate and changing market. I feel like a lot of investors, the big boys, overnight we're seeing billions of pounds pumped into cryptocurrency within, it's crazy, and there's no doubt a lot of that money, or at least some of that money, would have gone into gold, and instead is going into cryptos, right?
And that's exactly what the market is saying at the moment. Is that what they're looking at is Bitcoin is the new gold. Right? A lot are saying Bitcoin is new gold. Now, whether you see that or not, I don't know. Right? That's your personal choices. But a lot of people are saying, "Oh, Bitcoin is now the new gold. It's the modern one, that you can't produce it. Blah blah blah." And that it's taken wind out of the sale of gold a little bit. But I think you need a combination of both gold and Bitcoin and cryptos, right, and silver. But when you look at gold, again, a lot of these things are correlated, including the stock market is correlated to the dollar, right? Dollar falls, stock markets rise, and gold and silver and Bitcoin rises. And what you tend to find is when there is huge shake-up. So when there is fear in the market, the dollar rises, because the dollar is considered a safe haven, right? And that tends to knock the stock market. It tends to knock things like Bitcoin. It tends to knock things like gold. But both gold and the dollar can go up at the same time. They have shown it once in the past before. Generally, the correlated opposite, right? But we want to see on that, right? We won't see on that. But I like you. I agree. I think generally gold has a strong January and February, and then peters off towards March.
Yeah, exactly, 100%. And I think that is it's really straightforward, to be honest. It's a simple stance. There's nothing too complicated with gold going on at the moment. It's so it's a very simple way to look at it. So that's a nice little update in terms of the EV side.
Have you got a Bitcoin chart up there?
Yeah, let me get a Bitcoin
or not.
Yeah. Get the USD one up, yeah?
No, Bitcoin, yeah. US dollar Bitcoin, yeah.
There's our mouse gone. We want to go to cryptos. Let's get the Coinbase one up, actually. So here, right?
Look at that, right? That's a breakout I've never seen, right? But you look at, when people talk about investments.
Yeah.
Right? Look at that.
Yeah, exactly.
Right. And the thing is, there's more there's talk that institutions are going to be buying it. Elon Musk came out, said he's going to convert all his money from Tesla into Bitcoin. Yeah, there's a frenzy, right? There's a frenzy. But so that, Bitcoin can go anywhere. I would never short Bitcoin. I would never short Tesla. Well, I would actually short Tesla now, but Bitcoin I wouldn't short, right? Because
Gotta be brave to do that.
What,
Very
Tesla?
brave. No.
Bitcoin, yeah, I think you have to be. You have to be very, very brave to short it. But all you can do is buy puts, basically. I wouldn't short that.
Yeah.
But yeah, so yeah, it's moving. So eventually, Bitcoin will come back down. There will be some sort of air taken out of it, and maybe and what people have to start realizing is that there's certain assets, they all move at the same time, Kiki, and this is what's lost with people sometimes. That when it's risk on, Bitcoin goes up, stock market goes up, everything goes up. Gold doesn't do as so well, right? When it's risk off, dollar goes up, gold goes up, stocks down, Bitcoin goes down.
That's a good way to put it. That's
a correlation between Bitcoin and the stock market, right? There is 100% correlation between Bitcoin and stock market because it is a risk asset and it gives you a risk appetite. What's the risk appetite out there, right?
100%. That's a really good way to put it. It's really, really. I mean, to look at it, that's a really, really good way. But yeah, so that is a nice sort of roundup on the ones that we've been looking at. So what I'm going to do now is I'm going to stop sharing this now. I'm going to list a few others that I personally looked into, and some of which we've mentioned now is that I'm looking out for in 2021. So Nvidia is a big one for me. Multiple reasons. Obviously, again on the EV side, the side of the chips and all that kind of stuff. But a lot of next gen gaming is obviously now. So we've got the PS5, we've got the Xbox Series X, massive demand. Esports and e-gaming is like it's a market where it's big. There's jobs right in that sort of market. It's an industry now. It's not a hobby anymore. You get people winning millions and playing in competitions that are actual real competitions now. So it's not a where your dad tells you to stop playing the Xbox now, because it's a serious thing. So
so you reckon parents are going to be going, yeah, son, forget about going in to become a doctor
or a gamer.
Become a gamer.
Well, to be honest, I'm not gonna lie. You must probably have you must probably have better chances. You must have better chances of getting paid more, man. With becoming a doctor, you'll be fighting with the NHS. That's a fight for life, mate. You're never winning that one. But you got better chances in the gaming industry. Trust me on that one. But I'm not advocating anyone if there's any parents watching.
I'm just saying, as a parent, I just thought about what you were saying. I was thinking, oh, bloody hell,
Yeah, we'll see. We'll see if I have the same stance when I have kids, Marty. You could take me up on that one. Yeah.
Actually, I've got some students who are gamers. And believe it or not, they don't go home because their parents disagree with them.
Yeah.
So they're actually staying over the winter, over the summer, normally when most students leave to go back home, they're staying at the house. They're like, they're staying because they can't go home because the parents will have a go at them about gaming all the time.
Well, this is the dilemma, isn't it? I'll be honest with you, because I'm a sucker for games. So I like games quite a lot. So yeah, 100%. I'm into FIFA and Battlefield and all that kind of stuff. But like the dilemma is my parents will obviously be on the TV after work. So like when I finish my work, that they'll between 6 and like maybe 9, 10, they'll be watching movies and all that sort. So I don't get to play until like 11, 12, an hour maybe, or sometimes on every day. So I understand where they're coming from, so the battle they have to face. But coming back to it, Nvidia is, again, not just on the chipset side, but in a lot of things. So that is definitely a big one for me. Me personally, so Batman is one I'm looking into. Again, I don't know if you personally, but I've started to look at it. It's not one I ever considered before, to be honest. But after seeing that dip that we had recently, I'm a big sucker for retracement. So if I see a retracement, I might not necessarily use it as a long-term investment, maybe keep it for a couple of weeks or months, I'd say, and then we'll see what happens to it. So that for me. Now the next few is an interesting one. The next one is called Rocket Companies. Have you heard of this, Martin? Rocket Company. Okay, so they recently IPO'd, same time as Xpeng. Now, unlike many IPOs in a recent year, Rocket Company is actually profitable, and they generate a high return on invested capital already. So obviously the big thing that people are against where companies IPO when they're not even making money. So what the hell are you IPOing for? So, but this is unlike a lot of them. Now, they are almost like they're a holding company. They also provide technology in the mortgage services. So those hand in hand, imagine taking your initial mortgage market, the basic financial services and stuff, and applying high-end tech to that is what forms a new industry called prop tech. And obviously I was in prop tech with space, and prop tech is massive. So it's a huge and upcoming. So it's like fintech, finance and tech, a lot of the banks are taking on and merging themselves into. Prop tech is another industry as well. Again, it's up and coming. So they basically are a company that are looking very, very solid with good. Now at the moment there is sort of, I think they're trying to find their feet where their pricing is very, very high. So they have had good customer retention in the last 3 years, but recently it's been dropping a bit. So they need to sort it out. I mean, so much that they actually went from 613 million revenue in 2018 to only 44 in 2019.
Wow,
so
that's
a massive drop, huge drop. So although they're still profitable, they need to sort out that problem. So that's why it's one that I'm looking at. I'm not necessarily going any sort of balls deep, but again, it's a new IPO, but it's a solid IPO. It's a company that's got cash.
Is that an IPO that's in the NASDAQ or the UK IPO?
It's US. NASDAQ. Yeah. So that is definitely one. Again, I'll list it below. Everybody can have a look. Now, the next ones are interesting. Airbnb for me is a maybe. I'm going to look at it. It's Hold on. Go for it. That looks real. You vanished there as well.
No, forget it, mate. Let's bring up a chart of Airbnb.
Really?
Let's bring up a chart. Can you bring up a chart?
Yeah, I'll bring it. I mean, the chart is pointless to look at, to be honest with you. But I'll bring it up for you saying Airbnb.
I'm gonna try and explain Airbnb to people who may be stock property investors, right?
Yep.
That we are.
I've seen it a lot in the property space. Everybody seems to be purchasing. I haven't made any.
No. This is a rent to rent. Airbnb is like a rent to rent, but it's not a proper rent to rent.
Let's see. Okay, go for So this is I mean, we can only look at this on a daily, to be honest with you. We can't even.
Daily's fine, right? Yeah. Look at where it IPO'd at. Look where it is now, right? Look where
this is what we're talking about, right? Remember when we said when we're looking at IPOs, you never want to buy in. You want to wait for the bit of the crash to happen.
Yeah, exactly. We said, and it hit all the way down, then it back up again. Right?
Yeah, exactly.
Yeah, Airbnb would be a trading thing. For me, I'm not a long-term believer in Airbnb. I'm not.
Okay.
I'm not, because at the end of the day, you know what? It's a one product type company. I can't see them branching out into other things at the moment. But that's maybe me being short-sighted. I don't know. But as far as valuation of Airbnb is concerned, no, I'm sorry. You don't own anything. You own air, and I'm not putting that valuation on air. I'm sorry, right?
Yeah.
This is my logical side of me, right?
Yeah.
This is my.
But I guess. Do you have the same? Do you have the same view on Uber then?
Yeah, you look at what Uber did, right? You look at what Uber did.
Because Uber don't own anything.
Look, at the end of the day, Uber. If you bring up the Uber stock chart, right?
Yeah.
Again, it's a drive sharing. Airbnb is basically more about putting properties out there and renting them. Their revenues have fallen, Kiki, by a huge amount.
Yeah,
right?
100%.
The pandemic is going to change a lot of things. Pandemic is going to change a lot of things. But Airbnb were, from their IPO, they've just gone up straight away. It's crazy valuation. It's crazy valuation. Sorry, no, the same with Uber. Uber at the end of the day is a ride sharing app. Yes, don't get me wrong, it's great, and people use it. It's great, but I think, okay, materially, what have you got?
Yeah.
What have you got? What have you got that makes you unique? So with Airbnb, obviously, they've got the branding and a large organization, but there's nothing stopping other people from, you don't own anything. You don't own anything, for me personally, and these are my only personal thoughts. And I'm sure it'd be great to hear what other people think as well. Right?
Yeah, I think
everyone has a view, and that's what makes a market at the end of the day.
It's interesting because I read an article, right, which was and it wasn't a property investors article. So basically, the perspective they were looking at it is they basically said, so you see the pandemic right here now, Airbnb obviously this may or may not be a good time to buy because this may or may not like increase up, and the justification for their analysis was, well, if you look at it, right, more people after the pandemic, we get a vaccine that's going through, and things go back to normal, people start flying again, and doing, more people are going to want to travel, right, which means there's going to be, and like for example for me, everywhere I've gone, Europe, Canada, wherever I've gone, I've always booked an Airbnb. It's very convenient because you can get very easy city locations, and it's very cheap compared to the hotels, right? And it's more, it's like there's more facilities sometimes. Sometimes you can get more facilities basically in an Airbnb because it's personalized. So their argument was, well, once the pandemic goes and once people start traveling again, and once there's going to be more demand for travel than ever once the pandemic and everything is back, once everything is back to normal. So there is going to be a massive demand for people looking for Airbnbs. At that time is when it's sort of, and I get that perspective. So I don't know where I stand.
Okay, so let me ask you a question. Are you able to Google what's Airbnb's profit?
I have no idea.
How much did they make? Let's do it now, right?
I'll do it now.
What is the profit margin, or what did Airbnb make?
So are we looking at this year during COVID?
Yeah, no, now. Yeah, what profit?
So,
even before COVID.
Yeah, last
company, Kiki.
Last quarter. No, so here it says loss. Last quarter, Airbnb had revenue of 1.34 billion, down by 19% for 1.65 in revenue in a year ago in the quarter, but reported 290 million in profit for the third quarter.
So hold on. So they made a profit of 90 million. Is that correct?
219 million. It says here in profit for the third quarter.
Right. Yeah, it'd be interesting to see the actual balance sheet. I'd love to look at the balance sheet.
Yeah. I think there's definitely more digging that needs to do into it. 100% before we consider.
But I mean, I would look at the balance sheet.
Well, it says here the company has seen annual net losses every year since its launch.
Okay, so how much is it losing, Kiki?
So it went from a net loss of 70 million in 2007 to a net loss of 674.3 million in 2019, which is massive. It's huge.
Yeah. And what do you think? Okay, so now what you're saying to me, right? And this is what you're saying to me, right?
Yeah.
Look at it. Don't forget, as an investor, look, I'm slightly different. I look at it on a business guy, because I am a business guy.
Yeah, 100%. That is the best way to look at it.
I look at it on, don't forget, I do discount future growth. Don't get me wrong, right? But when I look at it, I think, hold on. So your business in 2019 lost 694 million, right? This year, it's going to lose even more.
Yeah.
In that company at how many billion?
That's true.
Now, if you told me, remember, share dealing for me, or sharing, is actually buying share in that company. I am an owner in that company. Would I want to be an owner in that company? And the categoric answer to you will be no, over my dead bloody body. Right? But would I trade it? Yeah, I'll trade it. I day trade it.
That's a different.
I want to be on there, but there is no way that makes any sense to me. Right? And there's a lot of companies out there, so that's what I mean. So there's a difference between companies. Apple makes a profit. Don't get me wrong. Apple's revenue have been dropping, but look at the cash pile. Microsoft makes a profit. Look at the cash pile, right? But there are companies, and especially SPAC companies, right? And the classic example. Now, I don't want to be politically correct about Tesla. I think Elon Musk is great. I know that he's got a vision. He's a very visionary guy, right? But when I look at it on a perspective of, let's look at the car, right? Let's look at the business. I think, you're making money, mate, because of the carbon credits, right? and that's what we talked about Toyota, right? Toyota is making profit anyway, right? It's a profitable company, right? But you're making money because of tax credits. And if you watch the recent article, Elon Musk actually tweeted out to his staff saying, listen, we need to increase revenue, otherwise we're going to be crushed as a pancake. Did you read that, or a souffle?
No, I haven't seen it. No. But 100%. I agree.
It's going to go on with Tesla, right?
Yeah.
And that underlining thing, and I'm not saying that, I'm saying trade it all day long. Don't get me wrong.
Yeah.
But don't think of it as a long-termer. Not at the moment. Not at the moment. And I think everyone is to that one side of the ship, and I like to be at the other side of the ship when the masses are thinking that way.
Yeah.
Tend to find that it doesn't necessarily work for the masses. So it's a combination. It's a combination of understanding what is going on, I think. But that's me. Listen, these are my views. I know we've got Tesla lovers right out there, which is great, right? Don't get me wrong. Yeah. But I'm just telling you the way it is. I'm not knocking anything or anything. I'm just telling you on my perspective, not anyone else's perspective. And I could be wrong. Tesla could go to $2,000 a share. If there is a frenzy, things can go anywhere, Kiki.
Yeah.
You can't control human emotion. It's called a bubble.
Yeah, exactly. That's 100% true. That is 100% true.
But I found it really interesting that I think it was about a week ago, 2 weeks ago, that Elon Musk tweeted out to his staff, internal memo, saying, listen, we need to start saving costs. Show profit. If we don't show profit, we're going to be squashed like a pancake.
Yeah, completely, yeah. Well, that's interesting, because that actually brings it nicely onto the next one if we're talking about cutting costs. Now, okay, so on a summary, Airbnb, I'm going to just sort of like sideline that.
I didn't mean to stop.
No. I think the whole point of this is exactly this conversation, right? Is we're looking at potentials for 2021. So so it's good we had that. So I'm not going to talk too much about the next one, but the one after, which I am going to talk a little bit about, is so the next one is TikTok is looking to IPO. Massive platform. The way I look at it is every single kid is using it, and those kids are going to grow up and they're going to continue using it. So, and there's advertisements. You go onto TikTok, there's advertisement stuff. They're already monetized it. They're already making profit. They're already making money. So huge. That's another one. I'm not going to talk too much about it, but
but you know what? That's a valid point, right? That's a valid point. The other thing is, talking about the new generation, social media is changing so much, right?
Yeah.
And that where it's changing is basically Facebook is now getting a bit old, right?
Yeah.
Most of people like my daughter, probably you're on Snapchat.
Yeah.
Right? That dynamic is changing, and all the old fogies like me are on Facebook, right? But it's changing. The younger generation are actually going more towards things like Snapchat, TikTok, stuff like that. So I agree with you, Kiki. I think these are the future companies that they can build revenue. But again, it all depends on where they bloody IPO.
Yeah, exactly. That's the thing. So that's why it's I think we just want to look out for it. So when this does happen for that. So okay, cool. So that's that. Now this last one, we actually were talking about this when, pre-COVID, we were sitting in our office in a WeWork.
We were. What happened to our WeWork office?
Yeah, exactly. So WeWork, obviously, in 2019, we're going to IPO. They had a massive thing. Everyone's getting excited, and everyone, now, even at that time, the company was going through a massive shit show, because it was burning through cash like no one's business. And if no one knows what WeWork is, WeWork provides flexible workspace across the world. If you look at their website, it's crazy how big they've expanded. They're taking on a leasing model. They're also another company that doesn't necessarily own anything. And they basically go big cities. They take on properties that are struggling to rent from big landlords. I mean, in Holborn, they got this massive, which I think used to be a cathedral. And it's a beautiful, beautiful building, and
Holborn is cathedral.
Yeah. So they get it, they convert it into amazing offices full of like cool stuff, and they rent it to individuals and companies for much cheaper than a lot of normal office spaces, and they're also serviced and they're flexible. So you get your free teas and coffees and all that kind of stuff. So you can imagine why they were burning for cash, because I mean the amount of coffees and teas people were, you saw that, Martin, like people having their 10 cup of froth cappuccino a day or something, so I'm not surprised they were burning through the cash. But anyways, they were going to IPO in 2019. It fell through. They also fired their CEO, Mr. Newman, and they got in another one who's actually, as I was saying, a person who got told the biggest thing we need to do is cut costs and make profits in this company. And he's doing a decent job. He's obviously not completely turned the company around, but during COVID, they've actually done all right and they've survived. And I think if we look at it, it's interesting because this is a company that actually will be in demand. Now, a lot of big companies are now looking at these sort of service offices because they don't need their whole workforce in them.
I agree.
And they only need them maybe 1 or 2 days a week. So why the hell are they going to pay for all this office space when someone can literally come in, take any desk, pay only 400 quid per person, maybe cheaper if they get commercial discounts?
Yeah.
It just doesn't make any sense. So this is a big time.
I agree, Kiki. I think that model can come back. And especially in the West End, where and cities around the world, where because people are worried about how much office they don't need as much office space. They're filtering down. The younger person or the younger organization still needs that office space, and I think some of these office buildings could be actually taken up by WeWork. Could be. I'm saying could be.
Yeah, exactly.
And if they do it right, I think,
if they do it right, 100%. And I think this is not one with a planned IPO, but it's one to look out for.
No, but their IPO was smashed to bits. The value. It's SoftBank's crazy valuations, right?
Oh mate, you know when SoftBank is in it, you don't need to say any more.
Crazy valuations. It really is. It really
is. But they're given a good showcase. They've survived through this pandemic, and if anything, I think they've done all right. So it's one to definitely look out for. I will share an interesting article in the description about this actually, so you can read it if you're interested in WeWork. But I think that is everything. So I think what we'll do is, as Martin mentioned, next week we're going to be talking about the market itself. What sort of markets are we looking at, and where the market's sort of heading in 2021? These were more about the individual stocks. The next week we'll look at more of the markets. But so is there anything else you wanted to add, Martin?
No. Next week, what I was going to do, I was going to cover some of the macro data as well out there.
That would be fantastic.
Why are things going up? Where do I anticipate it? Kiki, it could get really crazy, mate. Right? Yeah. It could get really, really crazy out there, as in going up. Some things that I want to talk about are, where are we compared to other things at the moment? Why are things going up? Why are things going up? Why is property going to go up? Why? And it's not necessarily about the money printing, but we're getting to a situation where we could have a massive rise in assets, basically, right? And then have a collapse, have an overall global collapse, which will happen, by the way. I don't want to scare everyone, but it will happen. It's inevitable. Right? It's inevitable. I don't know when it's going to happen, but I've got that in the back of my mind, right? But trade it as you can, make as much money as you can, and that's what we're all about. And helping you guys, and helping you guys try and keep you safe, right? But also, understanding how you can make money. It is about growing your wealth. It's not about just sitting at home and doing bugger all, basically. It's about taking action and taking control of your own life. If you leave it for someone else to do, they're not looking out for your self-interest at the moment. Only you have to do that.
Yeah, exactly.
So I think next week, looking forward 2020, what we're looking at, what you're looking at, what I'm looking at, and I am going to change. I have decided that I'm going to change my dynamics a little bit as well. So I'm going to shift my stuff around a little bit.
That'll be good.
And see what happens.
That'll be cool. It's interesting. So we're all about opportunities. We're all about helping you identify this sort of stuff, building that infinite wealth.
Yeah.
So we want to say, may the force be with you.
Yeah. Hold on.
May the force be with you for 2021 with investing.
Exactly.
Whatever you're investing in.
Yeah. And listen, happy. Will we do one before New Year? We might.
Yeah,
do.
likely.
Yeah.
But if not, let's just in case still say Happy New Year.
Yeah, and have a safe and prosperous New Year. But we will see you next week as well. All right. Yeah.
So apart from that,
and don't forget to share and like us. Yeah. Because we
like
guys. We're doing this for you guys at the end of the day.
Exactly. And the beer challenge is still on, guys. The 2,000 views.
That beard's getting bigger and bigger.
I know. To be honest with you,
Kiki, give it to me, mate.
Yeah, you could trim. I could trim my beard with a lightsaber. Fair enough.
If you don't put yourself.
But yeah, cool, awesome. So,
all right.
Catch you next week, guys.
All right. Take care, guys. Bye. Bye.